Good afternoon, everybody. Welcome to the September 2023 MSMF Wealth Management Podcast. As always, I'm joined by my colleagues, Cody Redding and Jay Peters. Gentlemen, how are you?
Doing great.
The weather's turned. It's nice and cool outside. I guess good news is the Cardinals can't lose 100 games, right?
Yeah, I saw that. Congrats.
Yay. Yeah, whoopee. And the Blues didn't do anything about their defense, and Torrey Krug's already hurt, and we haven't even gotten on the ice, so rock and roll. And on that note, we lost Jimmy Buffett. Not a good thing. You're a big music guy. Yeah. Very, very sad day in my household, but we'll charge on. So today, what I thought we could talk about, we've nibbled around this a little bit. You like that terminology, nibbled around it a little bit? But we really haven't sunk our teeth into it yet. See, boom, I'm here all day. Specifically, what is an estate plan and why you need one, right? Because I think there's a lot of misconception in the general public and maybe even with our clients what an estate plan is, what it's for, why everyone actually needs one. Before we get into that, just to keep our good friends at Compliance happy, we're not attorneys. We're not playing attorneys by day. Okay, we are all three certified financial planners, which means we have a very good understanding of estate tax laws, the benefits of estate planning, and kind of the pitfalls associated with staying away from doing the wrong stuff. What we always like to say is we get people all dressed up to go see an attorney. Okay. All right. So there's really two parts of estate planning. I think the part that people miss is part one of estate planning is to preserve everything that's on your personal balance sheet, to make sure it can provide you a lifetime of income. And then once it's finished doing that, to determine part two, the distribution, giving what's on your personal balance sheet or your wealth to whom you want, when you want, and how you want. Okay. And it's really a combination of those two parts. And really, I think we identified as three different levels. And so, Cody, I'm going to ask you to talk a little bit about what we'll call level one, or kind of foundational estate planning that's for everyone to take a look at and consider and then really probably take action on.
Yeah, so if you recall our June 2023 podcast, we kind of touched briefly on this. I think it was the risk to your financial blueprint. And we talked about the portfolio, your health, your disability, premature death, and some legal aspects of it. The big things I think we had took away from that is there's always something that can be easily overlooked that we have to part of the review process that we're kind of touching on a regular basis. But going a little deeper into it, the liability coverage that's out there. Now, we don't do the PNC, but it's something that we certainly talk about as it's a big aspect of covering usually the most expensive asset that you do have, your house. But the umbrella coverage, I think we had even mentioned in that a lot of times your insurance can even be a little less expensive if you add the umbrella coverage. Right. And I think I have $1 million liability and it costs like $300 or something like that a year to have. So really inexpensive if someone tries to sue you, which a lot of people like to do that. Another thing we talked about, kind of recapping, was asset titling, right? And I always like to at least touch base with it, try to anyways, once you're with clients, hey, make sure, do you have on your bank account? I think that's probably the most missed one. Do you have a pay on death, a POD? And your investments accounts are called a TOD, or a transfer on death. So, making sure we try to avoid probate as much as possible. Things that we always usually touch base on, we have the beneficiary summaries out there. And just because you're married to someone doesn't mean that money's going to be going there.
Correct.
So, and if you do have a life event change, even if a lot of people always say, okay, they were engaged at one point maybe, and they put their fiance on their beneficiary form, but once you actually get married, you need to make sure you just update that.
Right.
That way it has the new date after the marriage happened. And how you determine your annuities, especially if you have maybe some trust out there. Is it usually best to name the trust as your primary, or is it best to name your spouse as your primary? In most cases, what we find, it's usually better to name your spouse. and then have the trust as kind of the backup, the contingent. Now, certainly cases it might be different for that if it's your second marriage or whatever it might be,
Sure.
to where you name your trust first, because there is some special taxation things you can avoid that way.
Right.
You know, another big one we found out was, and I've worked through a couple of these, annuities. Trying not to name the trust, I think, is probably the best case when you're
Right.
dealing with annuities, because it really muddies up the water from being able to stretch out that if it's non-qualified. And then always talking about, wills, and that always comes up. Do I need a will? Yes, I think from a base ground, everyone needs a will, because
Sure.
it's kind of a catch-all that if something's not named, that it gets to where you want it to get to go. And remembering wills do not bypass probate. So that's why we talked about the titling or to get a trust. Healthcare power of attorney, just because you're married to someone doesn't give you the decision to make for their life, which I think that's a big one people usually don't have. And durable power of attorney. If a situation arises where someone's incapacitated, it gives you the right to sign your name, like on their bank account or whatever it might be. And designated guardians, so physical and financial, usually be done through your will and your trust. But if something happens to you and your spouse, and you can separate out who actually is the physical guardian of them and who is the financial guardian, the kind of the custodian of their money.
Sure.
And some people have them together, and some people separate it out just for purposes of kind of like checks and balances.
Right.
Yeah.
Super. Have you designated your guardians?
I have. I went through the whole process. Let me tell you, it was
Good.
fun. My wife really enjoyed it.
I'm sure.
But
I'm
no,
sure.
we're glad we do have that done. Now getting ready to go on a little trip here, and it's one of those things that usually doesn't pop into your head until you're like, wow, we could, going on a plane, something bad could happen.
Right.
And I think we have things sorted out.
Good. Yeah, and I appreciate that, because a good title or a good name for it is foundational, because many more people need everything that you just said, I think, than people really realize. And we were talking before we started. My oldest, Rosie's 22, living in another state now. She's got bank accounts, investment accounts, car with the title, and she needs all of that because she has an estate, right? And heaven forbid something were to happen to her living in another state. It's infinitely more complicated to deal with those things if you haven't at least done foundational estate planning. So it covers a broad section of the population, and I think that's probably the misnomer. Jay, when we go to kind of level 2, I think you're perfect to talk about this, because we were kind of joking before. It's those families that have a variety of moving parts.
Right.
You have a variety of moving parts.
I do.
You're married to a business professional. You're a business professional. You each own a business, kids, house. Tell us this level 2. Who gets brought up into that, and what kind of things need to be considered relative to level 2 estate planning?
Yeah, and I think most people, this is the part that when someone says estate planning, this is what they're thinking of, all the different moving parts. But realistically, a bulk of it is what Cody just went over, right? But now doing what everybody's thinking about, it's more the big picture of distribution, right? So preservation was a lot of what Cody's talking about. And now we're talking about, okay, if I'm not here, how does it, and it's a little more complicated, how do I want things to work out, right? So a couple things that we kind of walk down here, right? One might be income replacement. Do you have the right assets or insurance to kind of cover that if I'm not here, so to take care of my family, right? Major expenses. Maybe you want to pay for the kids' weddings that could be coming up, or buying their first house, or starting their first business, or something like that. All those different things, you might have the assets set aside, but do you have it literally put in place for it to happen, if something does happen to you? Let's see, debt elimination. I think that's pretty easy to kind of think about. But again, just making sure that your asset or your insurance is set up with the right paperwork. Basically, we're talking about paperwork right now, to make sure that if something happens to you, you're taking care of whoever's left behind, right? Now, a couple things that are a little more case by case. One might be special needs children. They have different trusts and different provisions that you want to make sure that if you're not there, you're really taking care of them. A normal estate plan probably won't have that. So just kind of going above and beyond that moving part, right?
Right.
Maybe caring for your parents too. So, right now we're talking about a lot of dependents down, but you can also have dependents going up too, right? A lot of people are considered the sandwich generation, right? Taking care of kids and their parents. In which case, again, just making sure, hey, if I'm responsible for my parents, who's going to take care of them, pay the bills if something happens?
Right.
Another one, a lot of people are very charitably inclined, in which case maybe they don't want the money to go to their family or whomever would be next in line. You need to have that in writing, right? Just making sure. And then the last one I have here is just trust planning. Anything that has to do with the timing of when the money's going to go to somebody else, right? Because that's the biggest reason to have a trust is the timing of it. So you can have revocable living trust, already mentioned like special needs trust. You can have IRA distribution trust, all kinds of different trusts. But again, it's all about who gets it, when did they get it, under what circumstances. Right. So those are kind of some of the moving parts that we talk about. Right. But again, it goes back to distributing your assets.
Right. Yeah, and I think I'd make 2 points there. It's almost like Cody's talking about the blocking and tackling, and you're talking about, okay, here's the strategy for the game.
Yeah.
Because we're asking this question if one or both of us aren't here anymore. And you talk about the trust, point number 2, the two of you have very young children. If you and your spouses were gone yesterday, they're not in any type of capacity to handle money. Someone needs to be a physical guardian, number one, and then you need a financial guardian. Maybe the same, maybe not the same. And the only way you're going to get all that done to the way that you want it is with a trust document.
Right.
So excellent input there. So level 3, let's go there. So, excuse me, what level 3 really is when we talk about preservation and distribution, is when part of the preservation equation is when your personal balance sheet is pretty sizable, then our friends at the IRS have their hand out. They want some of that, right?
They always do, Mark.
They always do. When you earn it, whether it's your paycheck or your investments, and when you try to give it away, they want a cut of the action, right? And right now those thresholds are pretty sizable. A married couple has almost a $26 million threshold before they're going to pay federal state taxes, right? Individually, it's almost $13 million. And for the vast majority of our clients, they're within those thresholds or maybe slightly over. You're not talking about a giant estate tax bill. But herein lies the problem. As you guys know, on January 1st of 2026, what they call the Trump tax cuts from the prior administration, those expire, right? And we're going to go back to what the income taxes and the state taxes were prior to that legislation passing. And those thresholds I mentioned are going to roughly be cut in half or more. They're going to go back to what the pre-legislation levels were, with the adjustments for inflation each year. And that could be 5.5, 6 million individually, 12 in total. You guys know this, our clients may not know this. If you have personally owned life insurance, the death benefit's included in your total estate. Yeah. So if you have $1 million, $2 million of individually owned life insurance, you can add $2 million to the top. And it's pretty easy when we get past January 1st, 2026, to bring a lot of people back into the taxable estate realm. So that level 3 is really all about preservation and all about making sure we understand what the IRS could be looking for, particularly after January 1st, 2026. So, I think it's a great kind of format. Level 1, foundational, the blocking and tackling. Level 2, you had all these moving parts. We need a strategy. And level 3, let's keep our buddies at the IRS at bay, particularly into the future, right?
Right.
So again, great stuff, guys. In closing, final thoughts. Jay, how about you?
Yeah, 2 things. Number 1, a lot of these foundational estate planning things, they might be covered, or you might be able to cover them with a lot of benefits that are offered. Like I know here we have benefits that includes a light estate plan, let's call it that way.
Your legal benefits, right?
Legal benefits, that's I could not think of it. And then even like some 401ks have that. Like we do some work with Principal. I believe they offer that same sort of thing. So maybe check, you might have already be paying for it, and you can already kind of get that in place. And then another thing that we haven't talked about, but is getting bigger and bigger, digital assets need to be part of this plan too. What to do with it?
Yeah, we talked about that on a prior podcast.
Yeah. So go watch the prior podcast. That's a good plug for it right there.
But
digital assets. So,
Excellent stuff. Cody, how about you? Final word?
Yeah, I think kind of what I had talked about was, the easy part is going through and especially for the accounts we don't have and we don't put your beneficiaries up there, maybe just double checking those, like at your 401ks and making sure that they're set up how you want. The banks, like that's always easily overlooked. And and also your title of your house.
Oh,
And your car. Anything with the title?
And the car, yeah. Car, but certainly the title of the house. You kind of want to make sure that goes to where you want it. Yeah, I'd say those are probably the big three things.
Great stuff, guys. Appreciate it. You got any questions, about your current estate plan? Again, that particularly Cody's foundational level 1 captures a lot of people, right? And a lot of people miss it and don't have. I talk about my 22-year-old daughter, and I haven't done it yet, right? So I got to get on that for her. A lot of folks are affected by that and need to take action. Certainly J level 2, when you got all the moving parts, we need a strategy for that. Ask that what if question and make sure we're comfortable with the answer. And then maybe not so much today, but in a couple of years, we're going to have a lot of folks that are swept into the IRS having their hand out, and in some cases, both hands out to grab a piece of the action, right? So any questions, let us know. Please feel free to share this with your friends or family if you have concerns that they may not have these things addressed, your parents, whomever. Happy to have anybody take a look, listen to the podcast and ask questions. Reach out to us, the phone, our various emails, our text lines. Happy to help out in any way we possibly can. Mizzou is 2-0. We'll see where they are next time we chat. Thanks for listening.